everyone, I'm Genevieve TOOP and welcome to this week's special market update. Last week we spoke with Tim Lawless, the Research Director at RP Data, which is Australia's #1 property information provider. We discussed the Adelaide residential property market along with investment and rental yields here in Adelaide. Here is an insight to our discussions.
And what about here in Adelaide? How are we tracking compared to everybody else?
Well, the Adelaide market's about in the middle of the pack when you look at all the capital cities, but a long way from the sort of growth we're seeing in Sydney or Melbourne. So we've seen Adelaide values rise by nearly 2% over the past 12 months, or 1.7% to be precise. So roughly in line with inflation. So we're not really seeing property values going backwards on a real or inflation-adjusted basis, but still rising nonetheless. And we're also seeing activity holding relatively steady in the marketplace, so around the historic norms. Interestingly, when you look at the Adelaide marketplace and the Adelaide economy, or the South Australian economy, which is quite linked with manufacturing, we haven't really seen a downturn in confidence, or we haven't seen a downturn in the housing market due to that lack of confidence in the manufacturing sector.
So do you expect that the sort of stable rise, I suppose, to continue, or what are you sort of anticipating for the Adelaide market?
I think it'll be a case of steady as she goes for now. The fact that interest rates are so low is clearly going to have some stimulus, but there's also the balancing effect of the relatively soft local South Australian economy, pretty much benign population growth as well. Dwelling starts are looking pretty healthy, but about in line with housing demand as well. So there's no housing oversupply or undersupply issues across Adelaide, and I think all those factors adding up, particularly the low interest rate environment, which is going to be around for quite a while, will conspire to see Adelaide values tracking around about the same level of capital gain, around the 2% mark year on year, I'd say.
So what about from the investor side? So on the ground, I suppose we've just started to see quite recently quite a few investors from Sydney coming into the Adelaide market. We've had a few examples even this week from what we're seeing, that they're sort of bringing their money and their investments over to Adelaide as well. Is that a trend that's, starting to come through in the statistics, or do you have any thoughts around that side?
Yeah, and it's no surprise. I think Sydney, a lot of investors are realising that the market's probably a little bit too hot. So finding those purchasing opportunities where you can buy below market value are becoming very difficult, as well as the fact that rental yields are getting compressed substantially due to the fact that rents aren't really rising a great deal. I think in Sydney, for example, rents are rising by about 3% per annum compared to values rising at 15% per annum, which means that rental yield for investors is just getting smaller and smaller. So Adelaide is showing a much higher yield profile. We're seeing the typical Adelaide dwelling returning at about a 4.5% gross yield compared to, say, Melbourne, which is the low threes, and Sydney in the low threes as well. So it's that higher yield profile which is probably attracting investors to the marketplace, as well as the fact that historically Adelaide has been very stable. It doesn't show the same sort of ups and downs that many other markets do. So it's in many ways a bit of a safe haven. And of course, it's also a much lower buy-in price. So a lot of investors now being scared away from the city marketplace because the typical house is costing $850,000.
Wow.
Whereas in Adelaide, it's about half of that.
Yeah, pretty much half.
Yeah.
It was great to hear firsthand from Tim exactly what's happening in the Adelaide property market versus the rest of Australia. And that wraps up this week's market update.